Hello everyone, my name is Ankit Agarwal and I am the fund manager for UTI Innovation Fund. Imagine for once that you had a time machine and could go back and invest in the internet stocks in the US in the 2010s. $100 invested back then, the Nasdaq 100 index would now become $800. UTI Innovation Fund gives you a unique opportunity to relive the tech and innovation rally, but in India. What is innovation? Joe Dwyer, professor of the University of Kellogg Business School, very succinctly puts it. Innovation is the process of creating value by applying novel solutions to meaningful problems. Innovation has been at the forefront of human development since the Industrial Revolution. Subsequently, we have seen revolution in automobiles and information technology in the 90s. Today, we are in the sixth wave of innovation highlighted by themes like sustainability, artificial intelligence, renewables, big data analytics, Internet of Things, and cloud computing. But you may ask, why India and why now? Let me begin by stating some facts. Did you know that as per Bain & Company study, India accounts for 16% of global AI talent? India adds almost 1.5 million engineers every year, as per reports by NASSCOM, and therefore becomes, from a labor perspective, a strong supplier of talent that feeds into this tech ecosystem. Another thing that has changed significantly is the rise of entrepreneurship in India. India as a country today boasts of the third largest startup ecosystem in the world. Moreover, with the availability of funding from many global private equity and venture capital firms, India has now emerged as the third largest in terms of the number of unicorns. The availability of a big market in India means that potentially one does not need to go out to sell their goods and services, and India becomes a good captive market. Just to give you a perspective, according to industry reports, India is expected to have around 378 million online shoppers by 2025. Which is almost equivalent to the population of the United States. Moreover, the development of the digital stack in the form of UPI, Unified Payments Interface, has created the backbone on which digital transactions and hence online transactions have grown multifold. UPI today is a gold standard in terms of payment systems globally, so much that many countries are now thinking of adopting it as their own payment system. Some of the sectors where we would like to look for investment opportunities would be in e-commerce, fintech, food tech, SaaS or deep tech, digital advertising, healthcare, specialty chemicals, and clean technologies. As per Bernstein, the opportunity size in India in some of these key emerging areas like shared mobility, food tech, e-commerce, two-wheeler EV sales, OTT, etc. is immense and expected to compound at 25% CAGR for the next decade. Let me go back to this time machine example I started with. And imagine that you were an early investor in Meituan in December 2015. At that time, Meituan had just the gross order value of $2 billion. In a matter of just 5 years, that went from $2 billion to $120 billion, or almost 60x jump. No one could have anticipated that a food tech company could see such nonlinear growth and investors would make a huge sum of money. We can see a similar growth opportunity in India, but time will only tell whether it happens or not. The potential for this nonlinear growth is there. Let me come to the investment philosophy of the fund. The fund focuses on companies that are innovative, exhibit high growth, and have high quality. Innovative companies are typically ahead of their peers in investing in technology and would try to take market share away from incumbents. The companies we aim to invest in would typically grow faster than their peers. The quality of the company would be exhibited by it being a market leader with a dominant market share, or companies that are self-sustaining in terms of their growth, or the ones which are generating high return on invested capital. These companies would also have very strong governance standards and robust business model. The fund would have a concentrated portfolio of around 20-25 stocks and would be looking at opportunities, at new opportunities. Many of them would come into public markets for listing over the next 2 to 3 years. To summarize, India seems to be at an inflection point today of its innovation journey, with labor, entrepreneurship, and capital all favoring a non-linear growth to happen in the tech and innovation space in India. UTI Innovation Fund would be a true-to-label innovation fund which is benchmark agnostic and backed by a research expertise. It may offer investors relatively high growth potential and is suitable for investors willing to ride the underlying waves of innovation. Thanks a lot, everyone, for your patient hearing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.